Man, don't you just hate being sick? Sound like an idiot right now. Please don't tell me I sound like an idiot. I was just joking. I was making a joke. Please don't tell me that. It's stock market. I need to quit crying. It's the weekly update time, okay? No crying whenever we're looking at these gains. It's all about gains this week. You already know it. Here's Dow's 5-day chart. Look at that. Talk about choppy. Woo. 5 days up 0.7% though. So thank goodness. 1 month up half of a percentage point now. Year to date up 15.5. So these are still good news. Good news things. Still good news things. So if we're looking at Dow components, obviously we're going to take a look here at Intel. Most of the stocks that will be spotlighted are going to be earnings movers because it's earnings season, baby. So Intel up 8% after beats and an upside Q4 and fiscal year guidance. You got to love it. Q4 guidance sees 19.2 billion revenue with a consensus of only 18.83. Gotta love it. And earnings per share of $1.24. Consensus was $1.21. And for the full fiscal year, they beat their consensus by about 1.5 billion. And their EPS beat was, 22 cents. That's pretty significant. That's their guidance at least. So, hey, that's a huge deal. For Intel specifically too. Intel has been relatively disrespected. I think a lot of chip makers really have been relatively disrespected over the past year, 2 years, because of weaker demand, and I think this is kind of a big factor because this could bode well for other chip holders, chip manufacturers. Obviously, it's good for Intel, that's for sure, and they also announced a $20 billion buyback. So if Intel stock's performing well, it could be big for other stocks similar. Again, beat by 18 cents on EPS this quarter, and beat by 1.13 billion, which again overall relatively flat revenue year over year, but still they were expected to decline business, and this is what I mentioned previously too. It's so significant if you're already anticipated to decline, and you give that guidance to decline. If you beat in that aspect and you end up flat, it's so much better than if you just meet expectations and you're negative. It's so much better. Because if they see positivity where you give negativity, it's huge. It can be huge for the stock, and that's why, as you see here, just on the day it was up 8%, which means week to date it was up. Guess what? Probably right around 8%. Just kidding, 9.6. Eat that, Intel stock, baby. So next we're gonna look at the S&P 500, which had a huge week. This is a huge week of gains. Not a boring week this week. Huge week. Again, choppy as crap, but what we care about is these gains. 1.22% on the week. 2.05% on the month. 3 month, we don't speak about 3 month. Year to date, though, 20.5%. That's an incredible year so far. Incredible. I gotta clap back at that. Who are we looking at? We're looking at Mohawk. Why? Because I was just looking at some Mohawk rugs the other day at work, and that's why. So obviously Mohawk, they make a flooring and rugs. Most people know them for rugs. They do make those. This is why I hate them. Those coconut fiber rugs that, it's good for getting crap off your shoes, but they feel like you're literally reaching in and petting the hand of Satan is what it feels like when you touch those things. I hate them. But regardless, up 11.8%. Wowee. Net sales, and this one is weird to me. So obviously, look, I ended up 10.9% or 11% on the week. Not on the week, on the day, and on the week up 14.3. I'm over highlighting. I need to get less ambitious here. What the crap is going on here? If you look at these numbers, decline of 1.2 billion. Okay, they beat on their revenue by $10 million, so it really wasn't a beat. I mean, it was a very, very marginal beat. U.S. business presented the greatest challenges during the... Wow, that's really rude. U.S. businesses presented the greatest challenges during the quarter. My greatest challenge is that I sound super nasally right now, and I already do sound nasally, so that's pretty rough. Soft retail demand. So, first off, you're telling me, well, that's not good, right? I mean, you're telling me already that there's already soft retail demand. So, up 11%, debatable. Gross margin down. Operating margin down. That's debatable. I mean, you're telling me up 11%? I'm confused. I'm just telling you. I'm just confused. I'm confused where exactly this 11% is up. I don't know. I don't know where this 11% is going. Is that just me? Why is it up 11%? Even the guidance isn't good. I mean, the guidance isn't good at all. I mean, for Q4, their guidance isn't any better than what they posted this quarter. It's worse. Where's the 11% up? I don't get it. That's just, again, earnings sometimes are crazy. Let's go to the NASDAQ, baby. Up 1.9% on the 5-day. Let's look at this choppy chart. And again, what a shocker, as we've learned. It's all choppy. Let's go. Up 1.9%. Very good week. Very good week if you're talking about indice. Which means 3.82%. And year-to-date, up 24.23%. What a great day. What are we going to spotlight for here? Why not? Because everyone loves them. BJ. I'm talking about the restaurant here. Okay, I'm talking about the restaurant. BJ's Restaurant reported comparable restaurant sales declined. Up 12%. Up 12%. Let's look at this quarter. EPS beat by 10 cents. Okay, I mean, you made money, which is, it's better than expected. Revenue up 3% year over year, beats by 0.37 million. I mean, it's a relatively decent factor there. But if their comp sales declined, what the heck happened? Operating margin rate slipped to 1.2%? What is going on here? Declined operating margin rate again? Restaurant level operating margin? Adjusted EBITDA, as some people might say, down? The company repurchased and retired 1.1 million of its shares. So where's the 12% up here? I don't get it. Again, weird stuff happens sometimes. This valuation is insane for this company. So we're gonna look just again at this chart I showed you last Sunday about earnings. Some of the key ones this week. Again, this really was highlighted by earnings for the most part. So we had McDonald's come off with some weak earnings. Procter & Gamble with some weak earnings. Just going to point out some of the key ones here. Discover, decent earnings. Snap, very high increase in revenue, but again, they lose money hand over fist. But still, the stock ended up recovering from what I would consider relatively bad earnings. They didn't meet their user goals. They didn't make any money again. They lost a lot of money. But guess what? Good for them. Texas Instruments was down. iRobot was down pretty huge. Let's see. Boeing down decently. It was not a good earnings. Boeing did not have a good earnings, in my opinion. Caterpillar did not have a great earnings. I hate to say all these are not having good earnings, but they're not. Microsoft, very good earnings. Microsoft had a very good earnings. Tesla, very good earnings. But it's not repeatable, so just making that note. Ford, not good earnings. Twitter, disastrous earnings. They got blasted for it. Thank goodness. I hate Twitter. Who else? Amazon, debatable earnings. They're questionable earnings. They're not bad. If we're talking about winners here, I put Visa is a winner for me. Visa had a very big earnings. I don't know why I said it like that. This mic filter is not staying. But very good. They not only jumped their dividend 20%, they beat by earnings per share significantly. They beat by revenue significantly. What a great deal for them. Gilead Sciences, bad earnings. Capital One, rough earnings. I mean, that's all I really want to spotlight here. So that was what, as far as earnings, that led the market up. Trade deal optimism also, guess what? Stocks ended the year on an upbeat note. S&P finishing just 3 points shy of its all-time high. U.S. Representative's Office said it was close to finalizing some sections of the Phase 1 trade deal, as we heard about before. But Phase 1 obviously isn't a significant deal. It is significant in terms of progress, but it's not significant in terms of what it does. But all the components were up because of it. Not necessarily all because of it, but obviously, as it says here, tech was boosted by Intel. Again, Intel's a very big tech stock, and if it does well, it helps other stocks in the tech industry do well. And just exciting stuff. Exciting stuff. So if I were you, I mean, just look at it. This was a very good week for us. I don't want to say next week is not going to be a good week for us, but again, I think it's going to be highlighted by earnings. So we'll see how it goes. Alrighty. Bye-bye. I'm sick. Achoo.